Welcome to Broke Daddy. Today is August 28, 2020. We are actually looking at our 401k account. 401k account. Ours is the dark green. So the light green is Harbor Capital. We try to beat Harbor Capital every year. This year, it just took off on us. We're not really concerned about it. Over the long run, we do plan on beating it. We did beat it 2 or 3 out of the last 5 years. So we're not too worried about it this year. You see this year when everybody took a huge dip here back in March. So we took a dip the first day. We got down to minus 9%. Harbor Capital got down to minus 21%. And S&P 500 got to minus 30%. Since then, we stayed conservative for a while to make sure the markets were coming back up. And then we've been slowly, steadily moving up. More importantly, we've been staying ahead of the S&P 500. So long term, we are beating the S&P 500. Even longer term, we do plan on beating out Harbor Capital. This year, we may not do it. We would have to avoid all the dips. And then as soon as Harbor Capital gets close to where our gains are, we would have to jump on board of Harbor Capital and still avoid all the dips in order to beat it this year. So far for this year, we are at 16.4%. S&P 500 is about 6%. Yep. And then the Harbor Capital, which has a lot of the FANG stocks in it, is at like plus 40%. So yes, it is beating us this year. But remember, we are pretty conservative, but we do get really nice gains. So this year we hope to finish with about a 30% return. We do hope to still finish above the S&P 500. And we think that Harbor Capital has probably maxed out for the year. We are expecting a pullback. So right now we've been missing out on gains, trying to stay conservative, waiting for this pullback. We don't know how deep it's going to be. We think it's coming in the next week or so. Our trading buddies, they're telling us to be very cautious here. They're closing out some of their more risky positions. So we're just following suit. I know we haven't talked about 401k in a while, but anybody subscribe to the Broke Daddy crew will help you maneuver your 401k. So in case the market starts dropping, you can avoid a lot of the drops. And then maximize as many gains as possible. Longer term, our strategy will beat out most everybody else. Okay, let's look at the chart for S&P 500, or not S&P 500, Russell 2000. Okay, IWM is about the same as the Russell 2000, which is the same as about small caps. So price, you see price really hasn't gone anywhere for the last week. If price doesn't get above 158 and stay above 158, it'll also need to get above 160, stay above 160 to continue going higher. I'm not sure it's going to do that in the short term. Longer term, like closer to like October, November, December, we do expect a new all-time high in the IWM. So we're going to stay close to that. For now, we're thinking IWM may come down to maybe the 140 area. If not 140, it might even come down to like the 137 area before hitting back up. So we're just playing a wait and see game at the moment. If it does get down to 136, once it gets down here, we'll switch over and probably do 50% small caps and 50% harbor capital to try to get our 30% gain by the end of the year. As far as stash goes, we do expect the markets to drop. We do have some money on the side. We'll just add to our stash positions. I can't say it. We'll add to our stash positions, and those will start playing out late September, early October. So we're hoping to go from a 20% gain to about 35% gain by late October, and finish the year out in our stash account about 50%, 50. As far as our Webull account, we hope to finish between 50, 50, and 65% gain for the year. Thank you for watching. Enjoy.